This is a demonstration of exercise 2321B worksheet preparation, and the problem gives us the comparative balance sheet for Uniboc Industries as of December 31st, 2020 and December 31st, 2019, and I have shown the increase or decrease in each one of the balance sheet accounts, both the assets and the liabilities, and I've also put out beside each one of these which of the categories of the cash flow statement each of these balance sheet accounts belongs in. Also, the problem gives us the dividends for the year of $30,000 that were declared and paid. So we need this information, first of all, to be able to determine the amount of net income for this year. We see that retained earnings changed by a total of $17,900. So net income is equal to the change in retained earnings plus the dividends. So $17,900 plus $30,000 is $47,900 for net income. The problem states, from this information, prepare a worksheet for a statement of cash flows, make reasonable assumptions as appropriate, and the short-term investments are considered available for sale, and no realizable losses have occurred on these securities. So the worksheet is used to help to enable us to make sure that we do the statement of cash flows properly. One thing that we have to do when we set up our worksheet is we have to include first on one side, the left side, the balances at 12/31/19, and then on the right side the balances at 12/31/2020. And what we are going to be doing in the reconciling columns is determining whether there is a debit or a credit to the account from the end of 19 to the end of 2020. And each of these reconciling items will also correspond to an item in the statement of cash flows, which I have listed the items for each one of these accounts in the bottom: the operating activities, investing activities, financing activities, and then the reconciling amount for cash. And each one of these items has a number beside it to show which balance sheet account it came from. So all of our debits and all of our credits will have to equal. Another thing that you do when you're setting up your worksheet is you take any accounts that are in the assets section of the balance sheet that have a normal credit balance, such as the allowance for doubtful accounts and the accumulated depreciation, and you list those in the credit section where there are mostly liabilities, of course, and stockholders' equity accounts. And that may or may not be necessary, but it just kind of helps to keep in mind that these have a normal credit balance rather than a normal debit balance when you're making your reconciling amounts. So I have set up my worksheet so that we will start at the top of the statement of cash flows with net income. We've already calculated that amount, and it was $47,900. So I want to show you how this worksheet will work. There is a credit to retained earnings for net income. The net income is a provision of cash. So all of the provisions of cash will be debits, and all the uses of cash will be credits, and they will correspond to the opposite item in the reconciliation at the top. So the items will fill in as we complete the reconciliations at the top. And the benefit of this is that you don't miss any items because you make sure that every single one of them has been included. And you also don't misidentify an item as being a provision of cash when it was really a use of cash. So This is a very small comparative balance sheet, but you could see where if you had thousands of accounts, why this type of worksheet would be so important. And it's good to uh, get used to using worksheets. Okay, so the next item on the comparative balance sheet that would be in the operating activities section would be accounts receivable. And we see that accounts receivable decreased from 19 to 20 by $9,000. So we're going to include that in the credit column. Next, we see that prepaid expenses also decreased by $2,000. So again, that would be in the credit column. Inventory increased from 19 to 20 by $20,800, so that would be a debit. Now we're going to move down into the liability accounts because that is the next item in the comparative balance sheet that's in operating activities. We see that accounts payable increased from 19 to 20 by $10,500. Short-term notes payable increased by $5,000. Accrued payables decreased by $5,000. The allowance for doubtful accounts decreased by $1,000. And accumulated depreciation increased by $5,000 for buildings and increased by $11,900 for equipment. So those are the accounts that would be included in the operating activities section of the statement of cash flow. So we can look at that now and see how these have filled in as we have made those reconciling entries above. Notice that all of the items that that are in the debit column would all either be non-cash items such as the depreciation expense, or they would be items that in the comparative balance sheet would be adding to net income. The items in the credit column, such as the increase in inventory, would be a use of cash. The decrease in accrued payables would be a use of cash, and then the decrease in the allowance for doubtful accounts would have to do with bad debt expense. So that is the operating activities section. So we're going to go back up to the comparative balance sheet and continue with the items that involve investing. The short-term investments decreased by $15,000. And then we go into the long-term assets, and land increased by $20,000. Equipment increased by $28,000. Trademarks increased by $25,000. So those are the items that would be included in the investing section of the statement of cash flow. So we can look at that and see that we have cash provided by the short-term investments, and then the purchase of land, equipment, and trademarks were all uses of cash that are in the credit column. So now we're going to go back up and finish, do the financing activities section. And that will start with the mortgage payable that decreased by $5,000. Our capital stock increased by $5,000. Paid in capital increased by $22,000. And then we paid dividends according to the problem of $30,000. The last item that we will have, and we'll go ahead and do that so we can finish the statement, is the reconciliation of cash. Cash decreased by $1,500. So now we can look at the bottom and see the end or the finishing of the statement of cash flows. The payment of the mortgage payable would have been a use of cash. And then the issuance of the common stock, both the par and the additional paid in capital, provided cash. The cash dividend was a use of cash. And then the decrease in the cash account would be in the debit column. So we see that our totals in both the debit and the credit column both equal $269,600. So we are in balance, and we could take the information from the bottom and easily complete a statement of cash flows. And that is the conclusion of the demonstration for exercise 2321B.